Never short sell bubble stocks when they're on a roll, but you don't have to own them either. Now, $10,000 invested in Nvidia about a decade ago is roughly $1.7 million today. This blew my mind. If we take a step back before we start the week, we realize AI is running, Nvidia is running. Overall, the sentiment is that these stocks are in a bubble. The market has been nonstop running, and most people are sitting by waiting on a correction because they didn't get in. So most people are sitting on cash. They haven't made money on this run. They're waiting for the sell-off. They're waiting for the cool-off. Is it actually coming? Are we actually in a bubble? We got a lot of stuff to talk about in today's video with Nvidia, Tesla, the overall market, how we can actually make money, and where they're actually at, where they are going. Because I think the narrative here is quite wrong. And then at the end of the video, make sure you stay till the end. We have Tom Lee, a perspective, and I like what he has to say. And I think it's going to be crucial whether you're watching the markets, trading the markets, or long-term investing. So without further ado, guys, please hit the like button on the video, subscribe to the channel. Let's get into it. This is Nvidia on the weekly time frame, gaining over 600 billion in market cap over the past couple of weeks. We all know what it's doing. We all know what it's been doing. Most of us missed the train on Nvidia, at least we think. If we take a look at Nvidia and how this thing has actually scaled higher, it might not actually be in a bubble. It might just be starting. And you can see Tom Lee at the end of the video touch on why Nvidia may just be starting and why it may not be in a bubble. But even taking a look at the chart, you can see Tesla way back here in 2020 was kind of flat trading, right? Slowly scaling higher, came up, and then got this rocket ship, okay? If we take a look at Nvidia, kind of got the same thing back here in 2018, scaled up, and then got this rocket ship in 2021, and then a nice big correction. Tesla also got this little correction in 2021, and then, of course, sold off in 2022, while Nvidia skyrocketed. It looked like money shifted from Tesla right over to Nvidia. You take a look at Apple as well. Apple had this nice, slow climb and then rocket ship in 2020. Take a look at Bitcoin. We had this nice blast higher in 2017, coming all the way back down, and then getting a way larger move. So point being, Nvidia may be on track like these other plays, right? It may just be a much longer investment, and we may be at the early stages of it. The real share price may be in the thousands. Now, is the market going to see a correction? What is about to happen? I'm going to show you what we're looking at going forward. First of all, we have CPI data for February on March 12th. This is going to be the start of the direction, and the end of that direction is going to come around March 19th to 20th, which is when the next Federal Open Market Committee, aka FOMC meeting, will be held on, where they discuss if they are going to cut, pause, raise interest rates. Pricing in a pause or a cut in March is what is happening. Now, if they don't cut rates, it's not going to be good for Tesla. And there is a 50-50 chance, in my opinion, at this moment. Okay. If we take a look at Tesla previously, these touch points 1, 2, 3, when Tesla trades in this channel, it likes to move higher and go for that all-time high. Tesla got these 3 touch points, and in my opinion, it looks like we're scaling up to this level right here before getting blast off. Tesla would have to see some positive catalysts over the next few weeks coming into March. Coming into that Fed meeting, Fed would have to, in my opinion, cut rates for Tesla to actually make its move into April, May. I think it has a good shot at this, but just keep in mind that it could also not happen. Now, I want to talk about the market. The market is up 25%, almost 24.68, without getting a cool off. Now, the market either likes to run 30 to 31%, or 25%, or 12%. These are the famous numbers where it likes to go in a bull market, and it likes to sell off once we hit these price targets. The fact that we didn't sell off at 12.5, the fact that we didn't sell off yet at 25, leads me to think we could come up to that 30 to 31% price target before getting a slight correction on the market, which would be 535 on the SPY, aka 5,350 on the S&P 500. With that being said, you look at a correction from 535 down to 480 and or a hard move down to 450 450, 450 cents, that is. Okay, so these are the two scenarios for the SPY, in my opinion. However, lottery stocks, what if we sell off tomorrow, right? What if we sell off right here? In my opinion, that's not going to be the case. I think we run until the CPI data and or the FOMC meeting, and then we don't get the news that we want to hear, and then we get that slight correction. Obviously, neither of these has to happen. We can blast through 535, come all the way up to the level at 557 that we're watching, which is the 1618 on the fib. Just keep in mind, when the SPY does run like this, you are going to see a correction in the near future. Fed speakers this week. Remember Bostic Wednesday, as well as Collins and Williams. And then Thursday, we have Goolsbee and Mester, and Friday, Waller and Daly. Here are earnings for the week coming up. Obviously, you can see in number one placement, Mara, ticker symbol MARA, and then we have a few other important ones. If you want, make sure to screenshot this, or we talk about them in Discord. Let me know in the comments down below where you think we are before I play this clip of Tom Lee in the market, in the main stages of a bubble, and are we even in a bubble? Finally, I'm going to overlay Nvidia and Intel stock price time lapse over Tom Lee talking, and I'll fast forward it because I think it's pretty interesting to say the least. I'm going to roll this clip for you guys. Before I do that, of course, get in the Discord. The link is right under the video. I'm in there on the daily. Come talk stocks with me. Hopefully you guys all enjoy your weekend. We also have options trading alerts in the Discord. It's the cheapest Discord on YouTube. It's a coffee a month. Get 15 free stocks. Open an account through Moomoo with my link in the top of the description and make it a positive, even a penny or a dollar, to start earning free stocks from there. You're also getting a really good percent back on your uninvested cash with zero risk, and level 2 order book data for free, access to trading options, going long, going short, and more as a retail trader. Both of those links are in the top of the description and pinned in the top of comments. I love you all. Let's roll this clip.
Sentiment is pretty stretched. Everybody's long. You really think there are that many people who are still non-believers in this? Now, I know there are some out there because I hear from them, but you really think there are that many?
Yes. I mean, I think there's a couple of reasons. One is many people think the stock market's very concentrated and the FANGs or the Mag 7 are expensive. But, you know, Nvidia's free cash flow yield is 3%. It's the same as the S&P. It's actually not expensive. And I think there's still this inflation mindset that inflation is stalling or could come back. And so investors are kind of inclined to short the market. And I think the best evidence that sentiment's still pretty negative is I hear people talk about the market being expensive, but outside of the FANGs, it's trading at 15 times forward. I mean, that's never been an expensive multiple. It's just people look at the price appreciation of the market and because they may not have participation, think it's a bubble.
You don't have any concerns at all that it might be, especially, stocks like Nvidia, which, as we say, seemingly, went from 1 trillion to 2 trillion in market cap, quote unquote, overnight?
I mean, in some ways, I think, stocks rise rapidly when either estimates change or they want to reprice the future growth. What's interesting is Nvidia's free cash flow was $7 billion a year ago. It's now close to a $50 billion run rate. So it's gone up by, 7 times, and the stock price hasn't risen by that much. I don't think we will have a bubble until the consensus declares there's no bubble and there's no risk, and then that's when we're likely in a bubble. But I think a lot of folks raising the prospects that this is a bubble means it's still early.
The market seems to be giving the Fed the benefit of the doubt that though it might not cut as early as it once thought, it's going to cut at some point this year. There has to be the expectation in this bull run that cuts are coming sometime this year, I would imagine. What happens if they don't?
I mean, if the Fed doesn't cut, I think it would pose quite a lot of risk for the stock market. I don't think the Fed's going to hesitate just because the stock market's risen or the ISMs have turned up. The Fed's policy rate of close to 5.5% is the highest policy rate in the world for any developed country. Look at the U.S. 10-year. It's at almost 4.5%. Germany's 10-year yield is 2.6%. I think that the bond market itself is telling us that the Fed is overly restrictive right now.
Do you think they should cut in March?
I think the probability of cutting in March is higher than what's being priced in. And a lot of it will depend on what February CPI looks like, which comes out March 12th. But, we think there are some anomalies in the January CPI, including poor seasonal adjustment and the fact that auto insurance is actually accounting for almost more than half of the rise in the supercore services number. And if those start to show improvements, I think whatever sort of hot CPI we saw in January and the repricing reverses to a large extent.
What happens if it's not March, and what happens if it's not May?
You know, if it's not March and May and it's not even looking like 2024, I do think it puts pressure on stocks. But if it's a Fed that isn't satisfied with 6 out of 7 good inflation reports, and they suddenly move this, the guidepost has to be 9 out of 10, I think the stock market gets impatient and just rallies anyways. But it just really depends on the path of inflation.
The other, issue, I suppose, as some are talking about, is this whole loosening of financial conditions because of this AI boom in the stock market. Do you think that's an influencer on the Fed? And on one hand, we're all revved up as bulls because we look at Nvda going up every day and we're like, wow, this is incredible. Look at these new records. But there's a price to pay potentially for that. And that is perhaps putting off these rate cuts further than we're able to tolerate. The AI boom is creating wealth, right? People who own the stock. But as you know, that isn't been translating into necessarily consumer spending incrementally, especially for the average American. And if the AI boom is actually replacing the labor market, because that's really what is being targeted, right? Turning a service job into a piece of silicon, which 98% goes to Nvda, that's actually deflationary, and it's actually deflationary to the labor market. So I think the Fed doesn't necessarily have to be worried if AI stocks are actually booming.